ACDC, how are you?
Doing well, Yaman. How are you?
I'm good. Have you found any data supporting consumers tightening?
How about today's job numbers?
Yeah, lower than expected. What do you think?
Quite a bit lower than expected. I mean, it's to me, it's just pretty bad news. But I don't trust it entirely because we could see a revision in it. We saw a huge revision in the December numbers, so can't really rely on that yet. But it just tells me that the market is looking at one thing and one thing only. They want rate cuts, and any hope of that is what makes it rally.
That's true. Yeah. I mean, I wouldn't say the job report was lower than expected. Ads were lower than expected, but like you said, they get revisions all the time. The unemployment rate ticked up by 0.1, which is in line with what you, C, and I were discussing in the macro space the other day. And the wage growth number ticked down, which is exactly what the Fed wants to see. Let me check real quick if there was a change in CME Fed Watch Tool estimates for the next rate cut or for the first rate cut. So the next meeting is in 39 days. There's 8% probability of a rate cut in June. And by December, the rates are expected to be maybe 1 to 2 cuts priced in. Yeah, I think it was one cut. So now it's 1 to 2 cuts.
I think it was a September number. That's where people are really banking on. So that's the probability, which I think went up over 50 again, because it had actually dipped below 50.
Right. Yeah, I guess we'll see. I mean, I think what's another thing that's important here is if this unemployment rate continues upward and then triggers the SOM rule, Claudia SOM, and a moving average estimate of how fast the employment market is worsening. So we're not there yet, but that's one thing I'm keeping my eye on.
Yeah, no, we're not. But the other thing also you have to consider is inflation. So just because the Fed sees an uptick in unemployment, they just can't take that and, cut rates. They have to get a confirmation with inflation also. And if that remains to be sticky, then they're not going to be able to do that, So it's a little bit of a tricky situation here for them.
Yeah. All right, let's switch to Tesla. Tesla Lee, welcome. How are you?
Good, Yaman. How's it going?
Good. Do you have 12.3.6 yet?
Yep, both of my cars have them. I think one doesn't. The new Model 3 doesn't, but both of my Model Ys have it. And it's pretty good. I use it quite often for my Uber rides. And it's very similar. It's a little less, what do I want to say? It's more direct. It still hugs a little bit to the right, a little too much for me. And the stop signs, it still doesn't really get too close to stop signs, like stop signs. Yeah, it can move a little closer. So I kind of accelerate a little closer, but it's really good. It is especially good, I will say, at night. I don't know if anybody else sees this, but especially Wes, I like to ask him. It works really well at night. Like I have no issues at all at night. It's perfect.
Interesting. And is that because there's less traffic, do you think? Or do you have the same amount of traffic? What do you mean by at night? Is it like 2 a.m. at night or like 9 o'clock, 8 o'clock?
I would say at dark. And my guess is maybe Wes, I'm just speaking, I don't really know, but because the light is shining on whatever it needs to shine on instead of having the glare from the sun, maybe throwing the car off a little bit. But it's basically at dark is when it really is excellent.
So I would like to.
Yeah.
Sorry.
ACDC and now Wes. ACDC, go ahead, and now Wes.
Yeah, just a quick thing. I just wanted to confirm. So regarding that edge case that I highlighted yesterday, so I had just got the 12.3.6 later on in the day and tested it once last night on that same intersection and twice today, and it has been resolved. So I'm pretty impressed with the quicker turnaround of that.
I knew it. I'm kidding. That's great. I'm glad to hear it. I'm glad that that is looking good. My kind of minimum bar is 10 tries. And then I know it's good. In similar conditions, trying to hold other variables constant. I think the other question was about nighttime versus day. Usually daytime is harder because the area of interest is kind of like a wide open funnel, whereas night is a shining the headlights kind of area. The part that becomes more difficult is if you've got oncoming traffic from the sides where the headlights aren't. And so that can potentially be diminished at night. So that's kind of the high level.
Thank you. Grant, how are you?
Doing well. Happy Friday.
Happy Friday. What do you think of this positive FSD review by TSLA? He says you're going to lose out on your puts.
I don't think I've seen the review. What is it?
He says it's doing great at night when it's dark out. Doing amazing. He has no problems, he says.
That's amazing. I haven't looked at the FSD tracker thing lately. Is that moving at all?
I don't know. Let's check real quick. I haven't checked that in the last couple of days here.
I am going to use FSD for the first time in a couple weeks over Memorial Day weekend, so excited for that. I'm going to do my best to pilot it into a truck and live stream the whole thing and, sensationalize it. I'm kidding.
Oh, look. Yeah. Look at this. It says 297 miles between critical disengagements for 12.3.6. This is actually looking pretty good. I mean, that's in contrast to some of the mixed reviews I've seen online. Like some people say 12.3.6 is a regression for them, but FSD tracker says otherwise. Wes, what do you think of that? I feel like sometimes what's happening is people who have a regression tend to maybe post more versus those, or maybe they get more engagement. I'm not sure what's going on, but the data says, according to FSD tracker, the distance between critical disengagement has increased to 297 with 12.3.6. Wes, what do you make of that?
That's great. I don't know the actual details of what the previous version was, how many miles it has on it. So hopefully it's statistically relevant. I would argue that we would need somewhere in the range of like 10,000 to 20,000 miles for that to be statistically relevant. So hopefully he's displaying that. I've asked him to display cumulative miles on the chart so that we can see the trend.
Yeah. But even then, it still has to be diverse across the country, multiple users. So that still wouldn't mean, statistically significant, right?
Yeah,
even though it's better than lower number, obviously. Wes, you got cut off.
That's relevant. Am I back?
Yep.
In aggregate, as you start to get the law of large numbers, as you start to get larger and larger, it becomes statistically less relevant. So yeah, I do agree when we're dealing with like 10,000, maybe even 100,000, or maybe even 1,000,000 miles, it can be much higher weight. But as we get into the 10 million, 100 million, billion range, it becomes much less significant. And that's what Tesla's looking at. So we're just seeing a very small sample of that. And, we can make speculations based on it, but it looks very promising. If you can see the trend, however, this is why I want to see cumulative miles. The trend is the thing that would be much more indicative of like what Tesla's actually seeing.
Got it. Well, we just had somebody join the speaker boards with Omar's Hallmark catalog alias and Omar's kind of profile picture, but there's a blue check mark. So I can't really tell if it's actually Omar or
No,
not.
it's me.
He's an alien.
Maybe it's
I know.
yeah, maybe
I
it's
know
an
he's an
AI
alien.
generated voice.
Yes. It's going to sound like him. It's going to act like him. He might make some joke. He might be funny. You never know.
Yeah. Omar, let's hold on. Let's see. This unidentified person, unidentified flying person.
Wait, I got a
UFP.
question. I can
What?
identify if he's AI.
Yeah, go ahead.
Omar, is your dad funnier than you are? Yes or no?
I don't know.
Wait,
I don't think
did you
so.
meet his? Did you meet his dad?
Your dad
Did
is
you meet
way funnier. I love his commentary in your videos. He's great.
Omar, let's see if this is the real Omar. What do you think of 12.3.6?
Well, I recorded a bunch of drives yesterday, and all of them were zero intervention.
Yep, that's him. This is Omar. All right. Well, do you want to talk about the voting? I think some of the
Sure.
brokers already sent out emails. What do we know so far?
Well, first, I just wanted to make a comment that, of course, the FSD tracker is, just a slice of data. But it does seem like we're getting to a place where the miles between critical disengagements is actually becoming more than the range of the car. So you're basically going to have to charge the car more often than you're going to have to disengage now.
Interesting. That is interesting, but still, right? Interesting milestone, but also is that relevant on the path to robotaxis? We still have to get to tens of thousands, hundreds of thousands of miles, right, between disengagements.
I mean,
For safety critical, we're probably talking millions of miles.
yeah, I think 1,000,000 miles sounds about right. These things could be driving 100,000 miles a year, so you'd want it to be like once every 10 years or less and continue to drive that down over time. But at the same time, you can go do a bunch of drives and they'll probably all be zero intervention today, at least for me in this neighborhood.
Yeah. Hey, somebody asked a question this morning in the topic suggestions. So I tried to put out the reminder for the space early in the morning and have people reply to that tweet with topic suggestions. And somebody said, "Can we go through the voting different proposals and kind of go through what the board suggests? What does it mean?" I think people are maybe having some difficulty with understanding some of the proposals.
Well, they actually tell you what you should vote right there. So just go with the board proposals for the most part, but we can dig into each of them if people want a more nuanced understanding of what they're voting for and what they should choose.
Okay. Well, if there's anybody in the audience who would like to come up and ask about a specific proposal, share their views, need some clarification, you're welcome to request to speak. Did you vote all your shares, Omar?
Yeah, I voted all my shares. Even my Cash App account with 0.03 shares, I voted those too, which I didn't know you could do.
Yeah, that is interesting. I didn't know you could do that the first time. Let's see. Bull 2035. Go ahead.
Hey, thanks for the space. My question is, there was something about discrimination and statistically measuring. I don't understand what they're talking about. If you guys have an understanding, I'd appreciate it.
Omar.
It's basically like a troll proposal by activists. So they, sometimes propose these things. Like sometimes PETA comes up and they try and make a proposal or something. So it's not really beneficial to the company, I don't think. Maybe do you want to read out what the text is, Yaman?
I don't have it in front of me right now, but let's see. Steven?
So this question's on the ballot. there's shareholder proposals and Tesla proposals. Are we for Tesla and against shareholders?
Well, you should decide, obviously, based on your best judgment. If you don't understand the proposals or don't know, then just go with the board recommendations. But generally, the shareholder proposals are something that the board decided not to do. So, any shareholder can kind of make one of these proposals and shareholders can vote on it. But I think the board has recommended voting against all these proposals. I'm pulling up the proxy right now so I can read any thing I need to read.
Thank you. Did you say you have 0.03 shares in your Cash App account?
Yeah, because people can send me shares on Cash App. So sometimes people just send me like Rivian shares, Lucid shares, Tesla shares, random companies. And then it just kind of, hangs out in there. It's like a small, dollar amount, $5 or whatever.
Interesting. I wonder if you guys sue the company with 0.0 shares, 0.03 shares. Can you imagine the people who went like, "Oh, he sued us for 6 shares"? Imagine if he did that with 0.03 shares. People will lose their mind. Clay?
Yeah, so on the shareholder vote, is the latest thinking that if Elon is successful in getting his compensation approved, which it sounds like he will be, that he's going to be at around 20% ownership share, and then he could get to that 25% through share buybacks?
Yeah, I don't think Tesla's going to do share buybacks anytime soon. Company generated $1 billion in free cash flow in the last 12-month period. Elon, I think, maybe sees some headwinds ahead, macroeconomic headwinds maybe. Interest rates are going to stay high for a while, it seems. So, I think part of the reason why the company is going through such massive restructuring, 10, 20% of people laid off, it's probably going because of, I mean, I can't imagine a company laying 10, 20% of people off and then also doing share buybacks at the same time. Clay?
How do we think he's going to get from 20%, let's say, to 25% target then?
Well, people have called for a new comp package as well, right? So I'm not sure. I guess we'll find out. Maybe Ken is in the crowd. Let's see if Ken is here.
I mean, I think it would probably be cost prohibitive to issue a new compensation plan with the same structure. So you'd have to do, I think obviously if he's able to exercise these shares, that gets him closer. And, then you have a few different options. A buyback, I mean, I think it'd probably have to be a pretty big buyback. You could also like buy XAI or something like that, or take a stake in XAI and pay in equity or something like that. There's, a few different avenues they have to maybe explore how to compensate him or get him to that point. Maybe some type of priority, preferred shares or something with 2 votes or something can be granted with the reincorporation or something like that. I'm not really sure, but they haven't talked too much about it. Right now, the issue on the table is kind of just the 2018 compensation package. And then depending on how that goes, there's a, very different gap to 25. So I think they'll kind of present their plan for what comes after this, assuming this is ratified.
Jimmy,
Yes.
how are you?
You know what? With the buyback news from Apple, I'm being pretty worried here
Why?
because it proves the U.S. economy is in no recession, and I don't think the Fed will decrease rates. I mean, how can this be evidence of anything but a lack of interest in innovating this economy. I mean, they could have used that money for a lot of stuff. That is more than the total amount of losses that Meta ever suffered for this ridiculous VR thing. And then they go, it's buyback.
We have Sawyer here as well. Sawyer, how are you?
Good. What's going on, guys?
Nothing much. A casual Friday. I'm wearing khakis.
I'm here to
Khakis
talk
and
about
polo
telematics.
shirts.
Anyone
No,
here
no,
interested in telematics?
no. Omar?
Yeah, I just wanted to mention yesterday we were talking about what impact the interest rates coming down might have on Tesla's stock price. And I thought it was really interesting with that weak jobs report that came out this morning. You kind of instantly saw a reaction. So I feel like that bolsters my thesis a little bit there.
Yeah, the yield curve moves quite a bit, very sharply with these reports, but then it kind of comes back a little bit. So earlier the yields were down about 10, 15 basis points, and now it's only down by 7 basis points. The 30-year treasury is only down by 6 basis points. And my co-host in the macro spaces tells me that he still expects 5% 10-year yield. So I wouldn't jump to conclusions just yet. Do you think yields will continue to go down, Omar? Oh, he just switched to listening mode. Let's see, maybe a connection issue. Oh, there he is.
Hey, sorry,
Omar,
I accidentally closed out.
That's
Yeah,
okay.
I mean, I think they probably will. I think there is some softening happening, not only in the labor market, but in the broader economy. Like you can kind of just, sense it. I think the consumer was extending themselves for a long time. You saw a lot of increase in debt, increase in credit card debt, people coming out of the pandemic. I think now things are, trying to starting to catch up with people in some ways. You are seeing, I think, an expectation that maybe there could be at least a couple of rate cuts this year instead of, maybe one at the end of the year or no rate cuts at all. So it's like a little bit of a pendulum with expectations. First, the market got a little bit overexcited. Then they're like, okay, maybe it's going to be higher for longer. Now they're saying, okay, well, maybe there actually is some weakness here that could justify a cut.
So, any announcements to make? Any news that you want to share? You voted your shares. I think you posted about it.
Yep.
Did all brokers send out emails yet? What are you hearing from people?
Yeah, I think most brokers have sent out the voting documents, so people should be good to go, at least in North America. I'm not sure about internationally, but I think the biggest news that I saw today was the U.S. Treasury Department giving automakers additional flexibility on the battery mineral requirements for the EV tax credit. Because
Yeah.
I think before you had to trace like the graphite or whatever, and if there was a certain amount, it wouldn't qualify, but it was really hard to trace, so it might cause some automakers to be ineligible for their EVs. So essentially, they just sort of been more lenient with that. And let me see if I can pull up the exact info. But yeah, that's probably the biggest news.
ACDC.
Quick question for Sawyer or maybe even Omar. Do all the hybrids on the market currently qualify for this credit?
No. So only plug-in hybrids would obviously qualify because they have a big enough battery. I think you have to have like a 7 point something kilowatt hour battery for it to qualify. But there's only a handful of plug-in hybrids that do qualify. But it's still very strange to me that a plug-in hybrid electric vehicle with, let's say, 25, 30 miles of fully electric range can qualify for $7,500 of an EV tax credit, which is the same amount that an EV with 300 miles gets. It doesn't really make much sense to me.
Yeah, it doesn't make any sense. Hybrids are definitely taking share from battery electric vehicles. And the way I put it is Toyota profiting from people's range anxiety. Toyota turned people's range anxiety into profit, and they tried really hard at it, and they're succeeding so far. But in a robotaxi future, when each car is going, tens of thousands of miles a year, then EVs will win hands down. And I think that's why Elon's focusing more on robotaxis. Because it's going to be very difficult to change people's mind from this middle option of hybrid, which they feel comfortable about, to full EVs. Machine.
Listen, I need to eat some eggs in a second, but I need to come on just to comment on the ridiculousness of this one speaker on the board here. I believe his name is Mars. 2 days ago, Mars was confidently saying how no one cared for the Model 3 if it had the rebate or not. Who cares? Everyone loves the car so much. And then I go look on Tesla's website. When you go order a Model Y, it takes you to the default being purchase. And when you go to the Model 3, the default is lease. Huh, that's funny. Why would they have a different setting for both vehicles? Maybe it's because no one wants to buy the Model 3 without the EV tax credit. And now you come in today, and Sawyer comes in, yodi ho ho, guess what? The biggest news of the day is the EV tax credit might be back. And I'm waiting. Omar had his hand raised. He already had a planned thing from ChatGPT to tell him how to say what a big positive this is going to be for Tesla, for the Model 3. Just like at the end of the year, he was talking about how the point of sale rebate was going to be a big boost in demand for Tesla vehicles, none of which has happened. So I think Omar is like the inverse indicator of correctness. He's wrong about everything. And now actually I have to drop because I got to go eat some eggs.
Well,
Did you prepare this? Are these prepared remarks? Who wrote these jokes for you?
well, I don't actually think this is going to change anything with the Model 3. So I don't expect any new models to qualify for the tax credit. Like there'd been some speculation about the LG batteries, but they're not used in the US. And I think they would have like a lower range and stuff like that. So I'm not sure there's necessarily going to be any difference, but obviously Machine was saying before that there was no EV tax credit for the Model 3. But of course, if you lease it or buy it as a business, you get it, which is why they're highlighting leasing. So I was just trying to point out that mistake he made the other day. But on a separate note, Joe Manchin really screwed us with this one, right? Because in order to qualify for the battery sourcing provisions, which say 60%, 70%, an increasing amount of the critical materials in the battery have to come from, these designated countries that are friendly, that's much easier to do when you have a small battery compared to a big battery. So relatively speaking, it's pretty easy for the hybrids to qualify, and for EVs, it's much more challenging. And it's only going to get more so in the coming years. So this is really kind of a sneaky bill that was, I mean, it's kind of crazy if you think about it. The tax credit was originally supposed to put zero emissions vehicles on the road that don't pollute. Now the government's actually subsidizing more gas cars that do pollute and actually encouraging people to buy more of these cars and pollute more. It's completely backwards. So honestly, they got to fix or repeal this EV tax credit. Even though the $7,500 point of sale, is nice for the Model Y, it just creates so many complications and it limits the profits because there's a price cap on the car. And then they're subsidizing hybrids, which to the consumer on paper, there's been a real change in the tone in the room. It's not all EV anymore. There's been a big pushback, and they have succeeded in, pushing back on the messaging and say, hey, what about a hybrid? It's a gas car with a little battery. You can plug it in. Why not get this? This is safer. This is better. And, the EV community has been just sort of weakened. Some were pissed at Elon. He bought X. Some, just maybe lost some money in the stock market or something, betting on some EV company. There's been excitement fading at the same time that, Legacy Auto is pushing back hard. And then combined with this tax credit, It's created a situation where EVs have lost momentum against hybrids. So I think we as EV drivers who see the benefit, people who don't want a hybrid, we need to explain why to people and really try and fight back against some of this FUD that the legacy automakers have been pushing.
The growing narrative is that hybrids are the future, which is pretty wild. 3 years ago, I never would have thought that would have been the narrative in 2024.
I mean, a $7,500 point of sale credit sure helps, because if you think about these automakers, they were looking at it from this perspective. There's a $7,500 tax credit out there. Now, if I don't have an EV, my competitor like Tesla can produce a car that's, a certain price and get $7,500 off. That's really tough for me to compete with. So I have to make a BEV to be able to be competitive with this tax credit. Well, now you don't have to make a BEV. You can just make a hybrid. That's way easier to do. You don't have to figure out the charging situation. It's just like a regular car. You just have a little bit of just a battery in it. It's a relatively minor change to your existing architecture. So the automakers have said, oh my God, this is perfect. We can do this and we can qualify for this tax credit and everybody can be happy. Our customers are feeling good. Hopefully we're feeling good. The government's feeling good. And we actually get this credit point of sale.
So I saw this post on your page about Toyota and hydrogen. What's the news there? Are they doubling down on that too?
Yeah, I mean, find you someone that loves hydrogen or loves you as much as Toyota loves hydrogen. I mean, some Toyota executives are saying that hydrogen fuel cells would be really good for larger size vehicles, and they're potentially considering making a Toyota Tundra pickup truck with it. Who knows if they'll actually end up doing it, but they're exploring the idea.
Thank you. Do we know of any EVs that didn't qualify for the $7,500 credit and now qualifies, or is it just too early to tell? I know Troy replied to your tweet and said maybe the long range Model 3 will, but not the standard range.
It's too early to tell. I'll just read something so people sort of know what the situation is with that news today. So the Treasury Department said it would give automakers until 2027 to remove some of the hard to trace minerals like graphite contained in anode materials and critical minerals contained in electrolyte salts, binders, and additives. And the Treasury has temporarily exempted graphite and other trace minerals from new strict rules, which essentially barred materials from China and other countries deemed a foreign entity of concern. And this include North Korea, Russia, and Iran. So the new Treasury rules appear to recognize, the realities of the global supply chain by providing some temporary flexibility in terms of where the critical minerals of these EV batteries can be sourced. So we don't know if this will mean that the new Model 3 long range will qualify for the EV tax credit, but they source their batteries from LG, their 2170 cells from South Korea. And previously that meant that they would not qualify. But under these new rules, sounds like there's more flexibility, and that could potentially mean that the long range would qualify. The rear-wheel drive gets their cells from China, LFP cells. So not sure about that one, but we'll just have to wait and see.
What about Rivian? Do you think Rivian vehicles will benefit from this change?
I mean, they already qualified to some degree. I'd have to look into what this change would mean for them, but yeah, potentially.
The big issue for Rivian's the price cap.
Yeah, that's true.
Because their ASP is about 90,000. So you can get some base models that qualify, but it has to be under 80K.
Yeah, I think they're introducing the standard range R1S for, what is it, 74,900. So maybe that will qualify. I'm not sure yet. But if we have some Rivian investors in the crowd, I mean, they follow the company better than I do. So if they want to come up and kind of share Rivian's side of the story, they're welcome to request to speak. And I know EV9, which is the other largest electric SUV, now competing with R1S directly. they're supposed to be starting production in the US, or I think they started, maybe they're ramping it. And by early 2025, Kia says they hope to qualify for the $7,500 credit. So maybe they need to move around their supply chains a little bit. We have Fred in the crowd, so if he wants to come up and clarify for us, that would be helpful. Waiting for my Aptera. Go ahead.
Yeah, I had a question about those LFP batteries. Like, is there manufacturing of LFP happening in North America at this point? And when, if not when? Because it seems like that would be the crucial thing going forward, considering that all the mega pack batteries and power walls would be LFP, right?
Yeah, so not currently, but there will be. There was some reports a handful of months ago that Tesla was partnering up with, I think it was BYD, to build the LFP manufacturing plant in Nevada. And then I think LG partnered with GM to build an LFP plant somewhere else in the US, if I remember correctly. But yeah, there's not much LFP production in North America right now.
Thank you, Sawyer.
Yeah, I think I also heard some rumors from people at CATL that they had licensed some equipment to Tesla at Giga Nevada, but I'm not really sure what's going on with that, if that's for Megapack or if the vehicles or what.
All right, let's see. Happy Friday, everybody. Hope everybody is relaxed. Not much of a stock price action today for Tesla. I'm looking at Sawyer's page. NHTSA said on Friday it has closed a long-running investigation into the loss of rear-view camera images in nearly 160,000 Tesla Model X and Model S vehicles. The auto safety regulator said Tesla's 2021 recall of almost 135,000 vehicles appears to address the risk presented by the failure of a media control unit and will continue to monitor the effectiveness of the callback. Okay. Tesla is creating a voice assistant to replace the voice commands. What does this article talk about, Sawyer?
It actually references a Green the Only post. Let me see if I can find his post about it.
Yeah, we talked about that last night.
Yeah, Omar mentioned it, I think, yesterday. First V4 Tesla Supercharger in Malaysia. All right.
But who put it up?
The one person they kept, maybe, I don't know. They flew it out there.
I'm still so
That one
confused
up.
by that move.
Yeah. Well, tell us about it. What's confusing?
I mean, I've always viewed Tesla Supercharger network as a huge competitive advantage for them, and I could understand that maybe after years of the company doing really well, that there would maybe be some bloat or some duplication of roles or redundancies and roles that you don't need anymore.
Nah, it's not about that.
But getting rid of the whole team's a bit strange.
Yeah. I mean, if it was about bloat, they would have gotten maybe like 10, 20, 30% of the team.
Right.
This is a complete strategy change, you know. But I have views on this too, but let's hear other people's first. Waiting and then Fred.
Yeah, so my view on it was that basically they must have a huge backlog of, superchargers that are waiting for permits. And if we could actually look into that, I would imagine that they probably are ready to build out the superchargers for the next year and a half on ones that are waiting on permitting and stuff. That they don't really need to have all these people sitting around trying to get superchargers, a year and a half from now, because we don't know what's going to look like.
Fred?
Yeah, I disagree with that. I think there's a lot more work to be done than just in the meantime of waiting for permitting, with all the logistics involved with deploying a fast charging station like just Supercharger, especially at the scale that Tesla is deploying them. I mean, like charging stall per station, the relationship with the electric utilities that Tesla gave up after they entered entire team, or I shouldn't say gave up, but definitely hurt those relationships. So I don't think that's the case. I think we have a much more insight now than we did the last time I was on about this move. I think now, I don't know how much you're aware of this, but Elon took over the team a few weeks ago with a direct report from Rebecca to him, according to several sources familiar with the matter. And there was no change of plan for the strategy of the Supercharger, just a restructuring of Elon now having the direct report of the Supercharger team and the entire charging team. And then when quickly after the layoffs came, Elon, according to sources, asked very deep 20+% cuts in the entire charging team. And Rebecca pushed back, according to two familiar sources. And then she was let go and the entire team was let go. Now, obviously, I cannot confirm that she was let go because of the pushback, but I have several people within Tesla that believe that that's the case. And there was no plan to change anything about the supercharging plan. Just like Elon said, it's like, oh, we still plan to grow the network, but just more at existing station that have 100% utilization rate, which is nearly impossible to do. So I think it's clear that Elon used, and right after he fired her too, he sent out an email warning all the other executives at Tesla that if they don't follow through with his demands in terms of the percentage of people they need to fire in their team, that they would also be let go. So he used her as an example to let her go. And I think this is a clear example of Elon just throwing his weight around Tesla right now and not doing moves for the mission. The only way.
Well,
go ahead.
One second. So, I think everything you said up to that, the last sentence, makes sense to me. So I don't doubt it. But first of all, Fred, I want to start with a lighter question. Someone in the reply said, "Did you put up Supercharger in Malaysia?"
No, I mean, Tesla use contractors that don't work for the company. So if all the contracts already in place, obviously there's plenty of stations that are still going to go through. But we already seen plenty of stations fall through the cracks now, either through Tesla giving up on their leases, not responding to those contractors.
Let me ask you a question. So let's say, for example, so I think it's about 500 people who got let go based on all the reporting. Can those people, like, if those people went to other companies, and since everybody switched to NACS anyway, and let's say Tesla maintained the ones they have, maybe finished some of the pending ones and let go of the other ones, and kind of aligned Supercharger network, Tesla Supercharger network growth with the vehicle growth for now, for the next year or two, let's say. But the 500 people can go to other companies and still work on expanding the overall NACS network, right?
Yeah, I mean, I think what you're describing right now is like the perfect scenario of how things could work out great with this move. I don't think that was Elon's plan. Like, I joked about that when he first announced it, that like it's actually a pro-mission move where he wants other companies to get the talent so that they can deploy their own network. I don't think that was his thought process there, obviously. But yeah, there is like a small chance that if Tesla focused on a hardware manufacturing for fast charging stations, the Supercharger specifically, like the deal they did with BP and the other gas station operator in the UK, that if they do that, and then yes, if those employees of Tesla, former employees, do find places quickly and are able to replicate their methods of their processes to deploy the station, it could potentially not be too bad. It would still result in a slowdown in deployment for sure. But you have to look.
But but think about the fact that Tesla's deliveries are down year over year in Q1. Troy says they're going to be down in Q2 as well, and then other legacy automakers pulling back on their EV plans. And Omar read us a few stats from the investor letter the other day. Supercharger network grew significantly year over year, whereas deliveries went down, production went down, etc. So, I mean, it is kind of let's put yourself in Elon's shoes for a second, and maybe you're expecting some sort of macro headwind because of these higher for longer interest rates. Maybe he saw this opportunity as kind of like switch out of this high capex, low profitable to business, as was solar panels, and allow the rest of the industry kind of take that on while Tesla focuses on, higher margin businesses. Do you think that's possible?
Look, even if it is a possibility, it doesn't make sense to fire the entire team. It's just like, even if you think, all right, I don't want to invest that much money in Supercharger. I don't think it's going to be a big profit margin sector. I don't think it contributes meaningfully to the business, especially if I see the order rate going down, which is the assumption at this point. Okay, fire 50% of the team, fire 90% of the team. Firing 100% of the team was clearly him just making a statement, a rash move, which he's been known to do. And it's going to be a net negative. I just posted right now on Twitter a chart from Bloomberg that compares the charging network right now in Europe versus North America, that shows just how big of a percentage Tesla is in deployment of charging station in North America. And even with the most flawless replacement of those employees that have undoubtedly the most knowledge on how to, of the extremely complicated process of deploying a fast charging station, it would still result in a massive slowdown that we literally cannot afford in North America compared to Europe. So I think it's a move that is undoubtedly bad for the mission, in my opinion, in North America at least.
Okay, Michael.
Yeah, I just wanted to add a comment about, there's a slowdown in delivery, so maybe we don't need as many superchargers. So this is a stock versus flow issue. So the flow is how many deliveries you have, whereas the stock is the cumulative number of cars that are in customers' hands. And the charging network needs to serve the stock, the total number of cumulative cars in customers' hands, not the flow. So, and the stock is increasing of cars, is increasing from like say 6 million this year to perhaps 7.5 to 8 million by the end of the year. So that's a significant increase, right? You still need to service, it's over 25% increase. And then on the most recent quarter, they had approximately an increase of stalls and number of locations of 26 and 27% respectively. So they're just an important thing to consider. I just wanted to throw it out there.
Thank you. We're going to go to Wes, Omar, Scott Archer.
Hey, Fred, I was wondering, what data would you think, if you saw, might change your mind over time? Not like tomorrow, but like over time. And what time period would that be? Thanks.
Sorry, change my mind about what exactly?
About the firing of the Supercharger team. I thought I heard you say that you thought it was a bad thing that this happened.
I mean, again, if you look at the chart that I just posted right now, if somehow we can maintain the same deployment rate of fast charging station in North America, or in fact, we need to increase it. Even with the slowdown in Tesla sales and broader EV sales, we still need to increase that deployment rate. If it doesn't slow down miraculously, even though Tesla represents double the majority of new charging station as of last quarter, then yeah, I would still be on board. Again, to be clear, I'm mission driven more than like Tesla stock. To be clear, like that's where I'm coming from.
Of course, I realize that. So am I. My hope is that the gaps will be served, and when they do put in place superchargers into those gaps or fill where there's throughput issues, that those superchargers are going to allow those gaps to be filled. In other words, maybe there's something else in store. Maybe there's autonomous chargers coming that are not from the supercharger team. So I just want folks to be sure that they realize that there's other engineering options other than superchargers that Tesla is probably not only aware of, but has in their books. It's probably on their roadmap. Thanks.
Can I just answer that real quick?
Yeah.
I would suggest looking at Marco RP's thread on this of everything that the Supercharger team does to deploy a charging station. It's just, I cannot emphasize enough just how complicated it is, and how much work goes into it. And I do understand your logic. And yes, I can admit that if Tesla has like a several billion-dollar contract in Supercharger hardware in the books right now, and they know that this is coming, and these people go work at other companies to deploy them, that would be the best outcome possible with this scenario. It would still result in a slowdown. It's undeniable, but probably not too bad of a slowdown, and maybe long-term an increase. But that's just a huge assumption to make right now, and I cannot make that assumption knowing how the team was fired and the lead up to it. I don't know if that's clear.
Okay. Omar, that's Scott.
So on the stock versus flow question, it's important to note that you don't need a one-to-one supercharger to car matchup. The superchargers can obviously be shared between multiple cars. One person can use it, then the other person can use it. The superchargers are typically built to peak capacity. So usually they're only, 50% or less full. And then sometimes you have a holiday or something where they get close to 100% full. But normally they're very underutilized. So that underutilization costs money. When you have, twice as many stalls as you need, each person who's charging is essentially paying for multiple stalls. So you want the stations to be, used highly, and you don't necessarily need to build one-to-one. They try and build the superchargers in advance of the deliveries they expect to make. So if they build out the superchargers at X rate, expecting X rate of deliveries, and they find disappointingly that sales didn't actually grow as much as they expected, sales actually went down, then you've essentially overbuilt ahead of that capacity actually arriving. And you can kind of slow down a little bit. If Tesla wants to cut the fat, and that is what they're doing. If you remember when Rivian had a really bad earnings and Elon commented and he said, they need to cut costs. And do you think he doesn't take that advice for himself too? When his own business is having a tough time, he needs to cut the fat. And the supercharger network is the fat. If you look at the business, this is the fattest part of the business in terms of capital expenditures related to, revenue. So obviously it's been hugely successful in bringing EVs where they are today. But if the manager's coming to you and she's not willing to make the cuts that you need, then she's not the right leader to lead Tesla through this next period. And who's essential? Well, it's a really good way to find out who's essential? Just let everybody go. And then wait and find out what breaks. And then bring those people back. Now you have only what's essential. Because if nobody asked for them back, then they weren't doing anything essential.
Intense, hardcore. This is amazing. I cannot believe I'm living through these business decisions. This is like one for the books, I think, this round of layoffs. Like this period is going to be one for the books. They're going to be studied, taught at schools. But we're learning it here live, firsthand. Scott?
Hey, how's it going, everybody? Can you hear me okay? I'm first time on this computer. Yeah, I take that as a yes. So I start with saying fairly new to this. I was saw your Merritt's comment on being surprised and the superchargers being a very valuable piece. And I always tout that as if I was going to get an electric, which I finally did a couple months ago. I would only do Tesla because of the charging network. That said, I was hoping to hear more conspiracy theory and less logic here, but of course, that makes sense. There's logic about this and possible moves. Is there something in the works that maybe with Ford? Just throw that out there because it was Jim Farley that essentially got Elon to agree to open the supercharger network, because until he approached him, Elon apparently didn't really consider it.
Yeah, Scott, it's first time speakers are required to ask questions. And one of the rules of the space is to don't start with, can you hear me? Because we can't hear you. It's a waste of time. And do you have a question?
I did have a question, but it's okay. In fact, I would rather just sit back and listen to Omar and Fred go at it.
Okay. All right. Nathan.
I understand Tesla is selling white label superchargers now that can be rebranded by anybody. I wonder where that fits into this conversation. I haven't heard any mention of it.
Dale, then Wes.
Okay, I kind of have a question for Wes because I know he's worked for large companies. So I've also worked for companies that are over 100,000 people. I don't know what's going on in Tesla, but I can tell you one thing, that large companies tend to overhire in the longer term. Everybody's making a case to do more all the time, and usually that does not work out. I think everybody knows that. So with Tesla, imagine you're a high performer and suddenly you're surrounded by lower performers that tend to be protective of their job. I think Elon is the type of person that knows he has to change that culture and he has to keep it in check because most companies, if not all, do not. So my question to Wes is that experience accurate with kind of what you felt, not at Tesla, but just kind of in large companies in general? Is that your experience, Wes?
Yeah, totally. In fact, I had coffee with a friend of mine who's been at Microsoft now for, I think, 7 years. We worked at Google Cloud together, and they're going through just massive reorgs. And he told me he has 4 VPs above him between Satya, 6 layers of management in total. Like, it's pretty unreal. So yes, I think there's a lot of bloat, and it's normal that they overhire just because the business is growing fast. And then maybe I'll also quickly add what I wanted to say. I expect there to be a Wayfarian autonomous charging product announcement on 8.8.
Thank you. 1 second. FSD is my middle name. Go ahead. Did you have anything to say? You can. No. Okay. Kyle. 3, 2, 1. Okay. ACDC.
I think I think Dale made a very good point in that. And if you kind of look back over the last couple of years, we've seen a lot of tech companies lay off large numbers of employees. Okay. And that's usually been taken as a positive. And I don't understand why this proactive move on Elon's part is just being singled out as, oh, he's like the only one who's letting people go and stuff. And I understand Fred's point, about the mission too, but there's no mission if there's no company. You got to put the company first, and the mission will be there. You can always prioritize things accordingly. So
Typically, you lay people off when things are going bad. So when people see layoffs, they go, oh, wow, things must be going pretty bad. Now, later, you report earnings and your earnings are higher. And people like that. That helps.
No hands mode, Michael.
Yeah, I'll just say I think people are kind of shocked that it was like the whole team that was let go, not necessarily that there were layoffs. If what Fred was saying was accurate, that Elon wanted 10, 20, 30% of the team, even 50% of the team cut, I think that would be very reasonable. I think some people are just shocked that it was the whole team and
Yeah.
it was
I
sudden.
mean, yeah, I understand, but I wouldn't be surprised if like the primary reason was the strategy change that maybe Elon had on his mind for a while after everyone adopted Max anyway. Like I said, let's go of the high capex, low profitable project or segments of the business and focus everything, all the resources, whether it's financial or engineering, on on areas where only Tesla can achieve, like Optimus. Whereas
Yeah.
superchargers, maybe other companies can take on, they can hire the Tesla talent. and keep that going. And maybe this is the best time to kind of do that, because EV sales growth is lower, and legacy automakers that signed up, made these deals, supercharging deals, they're now kind of canceling their EV programs. So obviously you don't need any planned, prior plans for growing the supercharging network at this time. Maybe that will going to resume in the future, but maybe this is the time, this is an opportune time to make that switch. I get it. And honestly, I was thinking about this a couple of days ago, the night that the news came out. And I was like, this actually makes a lot of sense. And it makes so much sense that this space should have been able to predict it. We had all the information in our hands to predict that move, and we didn't. And so I think, maybe we can learn from this. And maybe there is some truth to what Fred was saying too, but I think that's more of a secondary consideration. Maybe the plan was to do this transition over time, maybe throughout 2024, 2025, and maybe things got accelerated because of pushback and this and that he talks about. Who knows? Omar?
Yeah, I thought it was interesting that he framed it as kind of throwing his weight around, but I mean, he's the CEO. That's his job. So if you don't like the guy, you may say, oh, he's just making a stupid decision. He's throwing his weight around. But that's what a CEO is supposed to do. He's supposed to tell everybody, look, this is serious. We need to cut costs. When, just a few months ago, same people are complaining, oh, if he was only at Tesla, things could be so different. Now he's doing these moves and they're like, what? Why is he doing this? I mean, what part of balls to the wall on autonomy did people not understand? They thought it sounded good. Oh, balls to the wall. That sounds great. They didn't understand what balls to the wall actually meant. It means this. It means every single dollar that could go to training compute goes to training compute. And not a single dollar goes to anything else that's not needed.
Exactly.
They know how much training compute and data they need to achieve better than human safety.
I mean,
or they have an
it's
idea.
probably going to be like tens of billions of dollars spent over the next few years, right? Don't you think? Do you think it's billions or tens of billions?
Probably tens of billions, yeah.
Yeah. Whether it's Dojo,
especially as the revenue accelerates, that justifies more capex.
Yeah. Yeah, and also all the spend that you're gonna have to do to hire the R&D engineers that you need to develop this thing. Amazing. It's so crazy. This is against all the like MBA teachings, and it's so crazy to learn all that and then come in and just watch this pan out live. It's so nuts.
I think Tesla at its peak during the pandemic, when no one was making cars, had 33% gross margins. And, why do we have to take the 30%? Why can't we take the 70%? Like, that's the margin profile we want this business to actually have. And I think that's kind of what he is moving towards. And it requires, I think, rethinking things. The Supercharger network is very near and dear to our hearts, obviously. It's not going anywhere, but things have changed. It's not 2012 anymore. We need others to build too. And now that we're all on the NACS standard, we can do that. We can all build and share chargers. And things are going to need a lot more people participating to really build the chargers that we need. Tesla can't really do it themselves. And honestly, there needs to be a lot of public funding. So I think the government should also award more contracts to Tesla to do it so that they can, continue to build out the network because they've shown that they can build it better than anybody else. But I think selling chargers to others, selling charger hardware could also be a much more CapEx efficient way to expand the network.
I had a question for Omar, kind of switching to growth opportunities here. There was an article that Not a Tesla app posted about Waymo expanding their testing in San Francisco, northern part, and up to San Mateo or something. So any comments from you on that? And then also, if and when Tesla applies for some of these permits, how will we find out? Is it just the same regulatory information that we find out through, or is there some way that we'll know that certain permits have been obtained?
Yeah, so it's exciting news with Waymo. Right now, they're only in San Francisco. When they drive on the highway, they have a human behind the wheel. They're now saying they're going to allow the cars to drive without a human behind the wheel a little bit south of San Francisco, down to Daly City, San Mateo, with employees in the car, Google employees, within a couple weeks. So they're going to start it out with Google employees. If that goes well, they might expand to riders like me. And I'm not sure if that involves highway driving or not, or if they're just driving on the surface streets down to San Mateo. But, it's a good expansion, nevertheless, to get out of San Francisco. They also granted me access in Los Angeles, which is good. I haven't tried it yet because the geofence only covers a certain, portion of LA. But I'm going to try it probably this weekend. And then in terms of the permits for California, it's all public information. So the permits will be published online. There'll be hearings about it. It'll all be very much out there. And I wouldn't recommend California as a first location personally. I would suggest Arizona or Nevada as good locations to start testing it, where there's an easier regulatory climate and also an easier environment to start with. California is pretty crowded relative to those states, and they have good framework in place for self-driving testing. Phoenix, for example, has Waymo driverless open to the public. So I think Arizona or Nevada would be a pretty good place to start.
Okay, good. I see Habib is on the board and has his hands up. Before I go to Habib, just a quick word. Habib is a great supporter of the space. Be more like Habib. Go to the top of the page and sign up for Patreon. Really helps. And if you can't do that, I understand not everyone can do that. I get it. If you can't do that, then you can like and repost the space. Spread the word that way. Bring more people in here. Send the space to your friends, family, colleagues. I think this is the best source of information for Tesla, best source of analysis on Tesla and surrounding topics. Or you can go to the YouTube channel at Valley Analyst 1. Subscribe, like the videos, engage in the live chat, add revenue from YouTube channel, help to keep this space free and open for everybody. So there are multiple ways of helping. I mean, you can go to the replies, respond to the questions people ask. That reduces moderation work for me. So many, many ways you can help. Habib.
Thank you. How do you think those federal grant dollars that Tesla won for the supercharging network expansion, how's that going to be affected? Do you think they're still going to try to roll out the superchargers to keep that grant money coming in?
Are they going to keep rolling out superchargers?
To keep the grant money coming in with the grant money for the superchargers. Part of the thing, like people say, Tesla open up a supercharge network to qualify for the federal money. So how does the recent layoffs impact that?
I think that Tesla will continue to apply for grants and build stations with grant money where they're awarded those grants. Like, we were just talking about Malaysia. Oh, well, they had the contractors actually, build the charger. So, the Buffalo team is actually manufacturing the chargers. The contractors are actually putting up and maintaining the chargers. And there's a lot of middlemen here, right? Step number 5 in the Musk algorithm, automate, right? How much of this could be done with less people potentially? If the other people are actually putting the chargers up, then it shouldn't be too challenging with a team of even a few people to get them to just continue putting the chargers up.
Habib, there you go. Feeling relieved?
Yeah, I just want to follow up with that. I agree with what you're saying, Omar, and what everyone is saying about eliminating redundancy. And I actually think that I'm not sure how to form the coffee bet, but I actually don't think we're going to see a meaningful decline in supercharger rollout. I think they're still going to be able to roll out accordingly. I think this is a lot more fanfare and makes a lot of buzz lines and headlines, and people are going to post when there's lines at superchargers. Oh, you shouldn't have fired the whole team. But I'm not actually sure that that's really going to make a meaningful impact. I think they're still going to roll out superchargers as they need and as efficiently and as quickly.
Well, as they need is, that's a vague term. So what you can do for a coffee bet is predict the percentage growth over the next 12 months. And you can verify this on the investor letter, right? You can either do this I would recommend doing a supercharger station instead of number of chargers, but you can also do number of chargers. And you said there won't be a dramatic slowdown. And I guess you can kind of put that, if it's more than, let's say, 10% growth in the number of superchargers, maybe whoever wants to take the other side of you can win. And then if it's less than 10%, you can win, maybe. Habib?
Yeah, what I mean by that is that they probably have an internal ratio of new vehicle growth or new vehicle sales to supercharger or supercharger deployment. And, if they're predicting a decline in sales like they saw in Q1 and potentially like um, Troy mentioned his last post for Q2, then they probably don't need to aggressively roll out superchargers right now.
Yeah.
So I'm just
Well,
trying to
that's
figure
then
out
you're
in
just
line to
agreeing with
sales.
you're just agreeing with what we said.
Yeah, and so and that's what I'm trying to say is that according to sales, I don't think we're going to see a significant decline in superchargers.
Okay. John Lee.
So Omar, how close do you think Grok is from taking over some of the responsibilities of the employees that were laid off in the Supercharger team?
Pretty far.
So what kind of automation do we think we're going to see?
Well, let's say you ask 50 people to do a job that 500 people used to do. They're going to figure out a way to automate some stuff to do that. And, I'm not talking about like AI, just like basic automations, cron jobs, right?
Well, Omar, let me ask you this. So this is hypothetical, a variant of what John Lee asked. How far is Grok or any other chatbot, let's say, is able to call up, negotiate a permit with a government regulator and kind of close that on its own? Kind of like how, I guess, Google Assistant, they demoed on stage about a year or two ago, order some pizza or something, right? Something like that. How far are we from that, you think?
A year or two at most. So, Absolutely, yeah. Talk to them, answer their, an LLM could absolutely probably do most of it. You're right. So maybe that like factored into his decision too. I don't know. But ultimately, here's what people do not understand. The magic of superchargers is not in those people. They have a lot of know-how, they have a lot of experience, yes. But the magic of superchargers is in the company. It's the power electronics, it's the manufacturing capability, it's the prefabricated design, it's the know-how they've built up over years of how these things break and how to maintain them and how to keep them up. That is the magic of superchargers. That's still there. If we decide, okay, let's say sales take off tomorrow and we need to build more superchargers, go get those people back, hire more people, build the superchargers. Did we forget how to build them? No. Is not, okay, we're not going to grow that much now. I think in this environment, they probably need to grow like maybe 5%, not 24%, and that'll improve the profitability of the network substantially because there'll be higher utilization of existing stations. And then when things start to get strained or you start to notice that demand is outpacing superchargers, just start building more, sell more hardware to other people, make it happen. But I don't think it's necessarily the end of the world or some, irreversible decision that they're not going to be able to get out of.
Okay, good. Steven.
So my question is, why hire any of them back when just outsource the installation and maintenance, and then just have one guy in Tesla with an Excel spreadsheet and manage the whole thing from an Excel spreadsheet?
I mean, I don't know how the team runs, to be honest, but I bet they'll figure it out. I bet this is not the end of the supercharger network. I bet the supercharger network will continue to work and we'll all continue to use it. And I bet new stations will go up. And the level of drama and discussion will not match up with the actual impact.
Good. Inflexity. Inflexity. First-time speakers are required to ask questions. 10 words or fewer.
All right. I would just like to ask anyone, do you know any existing Supercharger employee that has gained employment at a new company already?
I don't know of any. Anyone know on the board whether any of the people who were laid off already have jobs? I mean, I'm sure there are some people. I mean, there are people, they're posting competitors posting on LinkedIn asking for Tesla employees to apply. So there's no doubt. I mean, anybody who leaves Tesla doesn't have any sort of issue finding a new job.
They had job offers before they even walked out the door.
Yeah, exactly.
Electrify America is like, please come here. Explain to us what we're doing wrong, for God's sakes.
Yes, connection issue, I think. But my company's hiring, so DM me any Tesla employees.
What's the job?
DM me and I'll tell you. I can't.
Okay.
It has to do with the government.
Yeah. Tesla Live is also hiring. We're always looking for new speakers. The pay is amazing. 0. And the benefits are great. You get to enjoy the company of other smart people like Jordan. Jordan, welcome.
Yeah, thanks for having me. I'm imagine that your discussion has already moved on. I just got home about the
That's
EV
all
tax
right.
credits.
We can always go back. We kind of bounce around topics as long as they're material. So obviously there was
Were you able to get a hold of an unpaywalled version of that article? Because if not, I have an unpaywalled link here.
Oh yeah, feel free to post it up. I didn't see it. What are the kind of highlights? What's most important to you from the article?
Okay, so what is it saying here? If you guys, it's a Washington Post article, I think, and I went to a site that mirrors it for free. And it says, under the rule, EVs will no longer qualify for the federal tax credit if they contain battery components that were manufactured or assembled by a Chinese firm. So it's not saying assembled in China, it's saying assembled by a Chinese firm. So, for instance, Tesla's Panasonic battery cells that they get in the United States, the 2170s, that's all Japanese firm, etc. So they're very specifically cutting China or trying to cut them out of those tax credits. So I don't know which vehicles have those Chinese components, but it gets even more stringent next year, where they say any critical materials that were extracted, processed, or recycled by a Chinese entity, which is pretty much, it's most battery materials that are extracted, processed, or recycled by a Chinese entity. Right now, I think it says it's getting something like 22 out of 110, something to that effect. I'd have to find it in here, but only 22 out of about 110 vehicles are now going to qualify for that $7,500 tax credit. But there's also a cutout for things like graphite. So it sounds like there's a few loopholes in there. So I don't think we're going to really know the impact of this until it's reassessed. I think they post this information somewhere, like on the IRS website. And I think you're going to have to look at each individual vehicle and each individual company to see how it affects them. But yeah, the short story is there's going to be a lot fewer vehicles getting those tax credits, and it's going to be even fewer next year.
Do we know of any vehicles that did not qualify until this news and now will? So Troy, for example, said maybe the Model 3 long range will qualify, but probably not the Model 3 standard range. Do you agree with that? And then on top of that, any other like Rivians or other automakers, EVs that switching?
Well, I know there's a website somewhere in the federal, I think it's on the IRS website, where you can look these things up, but I don't know if they would have updated it yet. But in this article, they give one vehicle as an example, and that's the Ford Mustang Mach-E. It says it no longer qualifies. So let me click the link and see if it brings, no, it doesn't provide a list. It just linked me to one of their other articles. So yeah, but you said Troy said that? That makes sense, because Tesla's longer range vehicles typically use battery cells produced in the US by Panasonic. Now, they also have battery cells that are produced by LG Chem.
Right.
Go ahead.
Right, exactly. That's exactly what he said. He said the long range uses batteries from LG Chem from South Korea. Maybe those will qualify now, but probably not the standard range because they're still coming from China.
Yeah, that sounds about right to me.
Okay, good. Michael.
Yeah, I mean, something doesn't quite add up here for me on whether it will actually impact the Model 3, because the rule change seems to be for the foreign entity of concern rule. And that rule doesn't, foreign entity concern for critical minerals, that rule doesn't take effect until 2025. So I don't think this rule change actually affects anything in 2024, but maybe Jordan, you have some thoughts on that. But there's my go-to is just go to the primary source. So the U.S. Department of Treasury put out a press release. I can link it, and it seems like the foreign entity of concern was the piece that they changed, and the graphite is a critical mineral, so it won't take effect until 2025. It wouldn't have taken effect until 2025.
Yeah, post it in there. I'd like to see that.
Is it okay if I pin it, Yaman?
Yes.
So okay, I pinned it. So Jordan, you can take a look, see what your interpretation is.
So crazy. I see the link on YouTube Live, but I don't see it on my X app, even though the X app is the one posting and YouTube Live is co-hosting right now. So weird. But these bugs. But nothing makes sense. Anyway. While Jordan takes a look at that link, Lord, welcome. Pretty Flacco. Do you guys see Lord Pretty Flacco as a speaker?
Yes.
He's just hanging out. Or maybe he's having some issues coming off mutes. Let's try again then. Anyway. That's insightful, Michael. Thank you very much. I didn't realize that was the case.
I mean, I'm not saying anything with certainty. I'm just proposing it doesn't quite add up to me. That's why I want Jordan to look at it. He's obviously knows his stuff about this.
Yeah.
You can continue. This is going to take me a few minutes because there's so much word soup here.
Yeah.
Most of it's fluff. So yeah, go ahead and continue.
Take your time. Yeah, while you do that. I mean, we also sit a lot on, we used to, not anymore, we don't do this, but we used to sit on silence mode quite a bit, when we had like 50 people in here. When there was nothing material going on, we just like sit there and people would do other things. Lord Pretty Flacco, are you back?
Yeah, sorry, I had a phone call.
Okay, how are you? Okay, who was the phone call from? How can it be more important than the space?
I know, it was just, it was actually an important phone call, so I had to take it. But good now. Yeah.
How you doing? How you feeling about your call options?
Well, I took profit on them on Monday, I think. And then I started building a new position. This is aside from my shares. But, the week's been a little choppy and sideways, so a little boring. But things are looking good for the next few weeks. So I'm fine.
Okay, good. Is there anything you want to talk about, whether it's robotaxis or Supercharger network or voting for Elon's comp or any other proposal? What's on your mind?
Yeah, so Omar just retweeted this Waymo tweet or whatever, so I pinned it up in the chat. But this is quite interesting. I was going through the California Public Utilities Commission's website, CPUC. I think someone earlier on the call, was asking about kind of where these permits are issued, where you can read more about them. It's called the CPUC for California, and I posted some links there. So I was just going through kind of, any publications that were related to, this approval. And I think it just goes to show, when you look at Waymo's post, you really can see clearly that regulations are a tiered process, right? How Waymo and Cruise started was by having human supervised, full self-driving capabilities, going throughout a city or part of a city during a certain part of a day, and with a certain number of vehicles allowed. Then those parameters are increased over time as the data kind of rolls in, and it eventually migrates towards an unsupervised permit. And so that's what we're seeing here. And now the geographic constraints are kind of being released. And so what I was trying to look into was actually how these jurisdictions are being approved, because it seems like from the map, it has San Francisco as kind of the main operational service area, and then going down towards Burlingame, and then being separated from, all the way south towards Sunnyvale on the peninsula. So it seems like it's designated by kind of autonomously driving without a human and autonomously driving with a human. So they're kind of bifurcating up the geographic service areas and what they are and are not allowed to do. So, I think this kind of just goes back to the whole topic about like, what is this rollout going to look like? What are the regulatory approvals going to look like? I think it would, I think that the biggest signal would be whenever they start doing human supervised pilots. And that was the question that I asked Elon back at the shareholder meeting back in 2022. So we still haven't seen it yet, which is concerning, because I'm like thinking like that's kind of the first step that everyone needs to do across these different cities. So I want to see if anyone has any take on that.
Omar.
Sorry, I was reading the the web page at the top about the battery sourcing. It's actually really nice. They've significantly eased some of the restrictions until 2027, so that should make it much easier to qualify, which is good news.
Okay, good. Who wants to answer Lord Pretty Flacco's question? Wes.
Sorry, you'd have to repeat it quickly. I didn't catch all of it.
Well, let's see. ACDC. Did you catch any of it?
Well, that's actually the exact same question that I asked, that when will we know about the permits? So I think Lord is basically asking if anybody's heard about any driver assisted testing being done by Tesla right now.
Well, I do know that they have ADAS employees who drive it around kind of internally. But certainly there's no jurisdiction that has approved human supervised FSD. And that's kind of the main signal for me. That's what I'm wondering. And maybe even to ask differently, you know, when do people think the first pilot will be permitted? I think that's probably a more interesting question. My inkling is that it's during the second half of this year.
I mean, you don't really want to sign up for a permit in California because then they just make you start reporting a bunch of stuff. So you want to be really good before you do that. You can start doing driverless testing in other states like Texas without having to do as much reporting, and then expand to places like California.
Yeah, I agree. I just think about the timelines because, you know, oftentimes these permits will be for 3, 6 months, 12 months before you can graduate to the second phase. So
They're not
that's kind
ready
of where
for a
my focus.
driverless permit yet. Not close. I mean, they're getting there, but
Even with
you know, Waymo,
supervised.
for example, you know, they started in Arizona. They were in Arizona for many years before they expanded to California. So I think Tesla will probably be quicker than that, but you want to crawl before you can run.
Okay, yeah, but for supervised, you're saying that it's not ready for supervised.
Well, I mean, they don't need a permit for supervised because they have human drivers. So, yeah. Like, generally, you want to avoid subjecting yourself to regulation unless it's time to do that, right? So, when it's time, they'll apply for a permit, but right now the software isn't good enough to do that.
That is an interesting take, given the fact that you post videos every single day about driving around SF using FSD. So I disagree
Yeah,
with
I
it, but
mean, there's a
I
difference between like, you know, a lot of zero intervention drives and like every drive being zero intervention and like, you know, nothing can break it. So it's just a different level of reliability. Like clearly we're starting to get there. When I go out and do a bunch of drives and they're all zero intervention like yesterday, that's a good sign. But ultimately, really, we're talking about, you know, 10,000 plus at least, if not, you know, 50,000 or more miles between interventions, not, you know, 300.
do you know what the metrics are for Waymo and Cruise?
Um, no, but it's out there. I mean, I think it's like, you know, I can't really, I don't know. Last time I checked, it was like 9,000 or something, down from 50,000. It's difficult to make an apples to apples comparison with stuff like that.
Wes.
Yeah, I'm agreeing with Omar, but also realize that it's not feature complete for driverless. So there's things that haven't been implemented yet. So for instance, it doesn't find a parking spot. It doesn't handle road closed well, hardly at all. It's not handling parking lots. It's not going in reverse. I'm not saying that it absolutely needs these things, but there's still features that Tesla has talked about implementing. So they need to
Actually, they're
implement
training
those.
a unsupervised model that does those things, but it's not out
It's
yet,
funny.
obviously.
Yeah. And it's funny that, they probably are working on these things. And I think we're going to get a lot of detail and a lot of information on 8.8. And the way that I look at it is that they're gathering data now on how good they are. So when I or Omar or anybody else has a zero intervention trip, A to B, and we're just resolving the nags, we're not actually taking over at all, and it's completing these trips. Essentially, that's a supervised trip. That's a perfect trip, and so they can use that as data because there's no human interaction there that's changing the path of the vehicle or that's changing anything that the software is doing. So they can use that data for regulators to show that they have these trips that are essentially just a supervised trip.
That is such a great point. I actually completely overlook that. I mean, I think that makes a lot of sense because my thinking was, look, if or when Tesla is ready, the first thing they're going to do is launch these permits, these supervised permits, and get approval for them across different cities in order to gather that data. So if what you're saying is actually, look, maybe this is actually comparable, and it'll be suitable enough for the regulators when the time comes to have those talks.
Okay, so are we all on the same page now? Wes, sorry, Jordan.
Oops. Well, if Wes has a question about the current conversation, you may as well finish that off before we change topics again.
Yep.
Yeah, I just want to add that we kind of saw the number of miles that are accruing on a daily basis, and I think Sawyer or somebody else calculated, but I think Sawyer tweeted it or posted it, about 68 days per billion miles. I think that's right. And I would assume that as people continue to use it, they'll just use it more because why wouldn't you? And I get that maybe people were on a free trial, and I don't know if that's ended for folks yet or somehow like that's going or they're paying for it. What I would expect is that those miles should continue to go up at about that rate. So by 8.8, we should see somewhere in the range of like 1 billion supervised miles that should hopefully demonstrate that not only were there, not any deaths, not any crashes, not any fender benders, not any police reported incidents, things like that. That's the kind of data that I'm hoping that Tesla will reveal and talk about.
Yeah, so I looked through that press release, and there's information in the Washington Post article that's not in that press release. So it sounds like both of them, there's got to be another document somewhere backing each of these things up with a bit more background. Because, for instance, the Washington Post article mentioned cutouts for graphite, whereas the press release didn't mention that. So I think I'd have to go a level deeper and look at actually what was written rather than what was just in the press release. But overall, it's basically the story of what I said earlier, which is increased restrictions on the number of vehicles that are going to be eligible for tax credits, because there's two separate types of restrictions that come with that $7,500 tax credit. So the $7,500 tax credit is kind of split into critical minerals and critical components. Now, going forward, more and more of the critical minerals and components have to come from the United States, otherwise you're not eligible. That's now, there's also for the critical minerals and components, going forward, those components aren't allowed to be produced by foreign entities of concern, basically companies out of China. So what this does, it says next year, you can no longer use critical minerals or components from companies out of China. I'd have to dig into it more to find out more detail on the graphite. The Washington Post article mentioned that, but the press release didn't. Hopefully that makes sense. It's difficult to cover audio wise.
Thank you, Jordan.
I need like
Omar?
a chart.
No, I got you. Yeah, we're all doing our best. Omar, go ahead.
I was just going to mention quickly that I estimate we're going to cross 1.5 billion FSD miles this weekend.
Are you going on a long road trip or something? Zachary?
Hey, I have a question. I really love the FSD and the option to rent it for $99, but seems like there's limitation on one of my cars, 2018 Model 3. The Tesla is asking for $3,000 before I can activate $99 rental a month. So my question is, do you think they're going to change this policy? And do you think this is going to slow down how many people adopt a rental for FSD? Thank you.
Omar?
Well, if I remember correctly, there were not too many cars sold before Tesla made autopilot standard. So yeah, if you are one of those people who doesn't have basic autopilot, amazing that Tesla used to sell cars without autopilot, I know. Then you do have to pay the $3,000, which kind of sucks. But I guess that is their policy. So I don't know if they're going to change it or not, but you can do it if you want, or maybe just upgrade the car. But yeah, the cars that don't have autopilot will need that to subscribe to FSD currently.
Chansu, then Michael.
A question for Wes. Wes, I like your idea of gathering all that no input drives and then training on that. But how do you see, say, that sort of last couple meters or so where the GPS data might be a little off, and then the car says you've arrived at the destination, but then maybe the entrance is maybe a couple meters down the road? How do you fine tune that?
That's a thing, that's a detail of Google Maps. So Google Maps has that data where the entrance to destinations are. So these are, like obviously larger destinations like your Home Depots or your grocery stores or things like that. But also for where the road connects is also likely where the entrance is. And also the last mile is handled just purely by vision. So it gets you to a location on, via GPS and the road network and the snapped road path, but then it has to find, a viable parking spot. I don't think a good solution is just the Uber solution of putting on your hazards and blocking traffic. That doesn't work for me. So I hope they look for a better solution than that. So again, it's a function of Google Maps. It has that data. And I know that the data that they're currently getting is not great. I actually snapped or put a pin down in a parking lot in a local pool area. It's a big parking lot, and it went into the neighborhood instead of into the parking lot, and there's no connection at all between those two. So still issues there.
Thank you so much.
Michael, then Brandon.
Yeah, I just wanted to make a quick point about the Supercharger stock versus flow discussion, how it needs to or doesn't need to keep up with vehicle production. So I just put out a post on my page about just estimating how many cars, because had the question, how many cars do we have per location, Supercharger location, and per port? And what is the trend? And so the answer to my analysis is that we have around 960 cars per location and 104 cars per port. And the trend has been, over the last 3 years, it's been a consistent upward trend. So Yeah, there's actually not a one-to-one relationship between number of chargers we're building, Tesla's building, and number of cars that they're producing. And in fact, it's actually the chargers aren't quite keeping up with the number of cars because the number of cars per location is expanding. So um, now, does that mean it's a bad thing? No, it's actually a good thing. Utilization is higher, which means their revenue is better. But then it's a question of at what point is it getting congested? And I know a lot of the locations in California
let me ask you
get
something on your
close.
methodology. So you added the cars produced, right? To find the cumulative cars. Did you make an adjustment for total cars, which is probably a small number, but any sort of adjustments that went into it at all?
No, I no adjustments actually. I just did well, actually, I worked backwards. So I didn't add them together. I didn't go bottom up. I worked backwards because they said they did produce 6 million cars at the end of the in March 30th, I think they posted the 6 millionth car produced, and then they report the number of cars they produce each quarter, so you could just back it out and look backwards for a few quarters. So that was the methodology.
Got you. Okay. Was there anything else to your points? I pinned Michael's post at the top of our screens if you want to kind of look at the chart and the table.
I guess maybe like if we knew like the total number of cars in California, we could establish a benchmark of what we could just say all chargers in California or the average charger in California is congested, and we could say how high can this number go before it gets congested, and kind of give a baseline for that to
Yeah,
see.
interesting. I mean, the other thing is like obviously the non-Tesla charging network is growing too. So, and that applies as well because sometimes Teslas charge at those locations too. So, yeah, interesting. Thank you very much, Michael. Also, I would recommend using delivered numbers, right? Not production. So, if there's to the extent that there's some sort of inventory growth, then that would also impact. So, some sort of adjustment for total cars and some adjustment for delivered versus produced.
Yeah, I think
Brandon.
generally you want to see this number go up because that improves the profitability of the network. If you're dividing it among, 1,000 cars versus 800, then each car is paying less. They can have lower prices. There's a lot of, benefits there. So if you think about like 100 cars served with each connector, is your car at the supercharger, 1% of the time or less, probably even less than that. So one connector can be filled by 100 cars. Not all 100 of those cars are going to charge at the same time.
Yeah. And then the other thing is, obviously the average charging rate of the network is growing too as more, V3 chargers are installed, V4 chargers are installed, etc.
Yeah, and then as they can charge faster, you have more free time with the same number of chargers.
Yeah. Brandon.
Hey, this is kind of a loaded question, so I'm in El Salvador right now, and most people here don't have cars, and the cars that are here are pretty used and usually shipped from the United States. A lot of them are very old and skew out this like great country, developing, up and coming. Do you think the Robo taxi network can take off somewhere like this? Because it's going to be much cheaper travel in terms of, just having a car or taking like public transit. So I wonder if this is like in the next 5 years or so, it'll just completely invade these kinds of countries in Central America and Asia, or what other parts of the Tesla network could come here and kind of make life better.
Who wants to answer that?
Generally, it takes longer for developing countries to get technologies than, first world countries. But you can imagine that soon after, it would expand all over the world. For example, I just saw a video today of somebody who built a self-driving car in India. So eventually it will reach every corner of the world. I mean, it's going to look very different. There's tons of electrical infrastructure, charging infrastructure that needs to be built. There's tons of road infrastructure, mapping infrastructure, stuff like that that has to be built up. But it'll happen in time.
Brandon?
Do you think this is something that'll like help countries like develop faster, or do you think it's something that they'll just kind of acquire as they're developing? Like, will this kind of increase their economic like output and just increase their ability to like manufacture with the electrical grid and everything like that?
Well, probably 70% or to, 70 to 90% of the benefits going to be outside of the first world. Because if you look at, for example, debts, so there's 1.3 million deaths from car crashes around the world. In the United States, there's 40,000 deaths. So we're talking about a small percentage of the world's deaths. We have pretty safe roads already. So we don't have that much to gain. I mean, in terms of deaths and car crashes. Most of them are happening in the third world. So if we can actually get those technologies out into those places, that's where most of the benefit's going to be. And that's why it's so important to design a system that's a pure vision system that just uses cameras and a fairly low cost computer. You think they're going to have a car with LiDAR in El Salvador? No. So if you're saying that we need LiDAR, you're sentencing those people to death essentially by saying you're not going to get this technology for a very long time. So, here people already have cars, they're pretty happy. In other countries, this technology will enable, low cost, publicly available transportation for the first time in many places in the world. It'll change lives, it'll remake countries, it'll remake the geopolitical world order. So, obviously we need to get it up and working in the US and Europe and China before we expand to other parts of the world. But most of the impact is actually going to be when we cross from the first world into, for example, South America, Asia, um, other parts of the world.
ACDC.
Yeah, that's exactly what I was going to say. That it's something that Elon also pointed out, that in some of the developing countries, the complexity of the driving is entirely different. So it's only once, and ideally it would be the best markets to serve, and their need is much higher. But it's only once we have resolved the equation here that you can take it out to those countries. And I'm sure the training compute and everything will be specific to those countries itself and will take some time also.
Brandon?
Yeah, a lot of it probably also has to do with like governance and leadership. Hopefully, I mean, somewhere like where I am right now in El Salvador, it's where my fiance's from, so that's why I'm here right now. But the country's led by a guy who's very similar to Elon in a lot of different ways in thinking. They made Bitcoin part of their national currency. So I think hopefully in places like this and other places like young leaders who are trying to like, revolutionize their country and technology, hopefully they adapt faster and, make it better that way.
I agree, Brandon. So I think the transition to those countries will come much quicker than the transition came here itself, because those people really need it and will benefit, and they'll see the use of it, and they are going to adapt it a lot quicker than we are, and the regulations aren't going to be as red taped as we have.
Cody.
Hi, thanks. The other thing I'm thinking about with robotaxi fleet rollout is got to be where the current service centers and the locations where they could expand a lot of them, because they've got to have a level of density that makes sense for a large portion of cars. So we start seeing a bunch of hires and postings in certain locations, then we'll know where that rollout velocity is looking like.
Omar, did you hear that?
Yeah, he was talking about service centers and robo taxis. You know, I think I'm not sure Tesla can really do this on their own. I think they're going to have to lean much more heavily on partners. I think they're going to have to lean much more heavily on do it yourself. Like, you know, at their service centers, it's kind of like the anti-service center. It's so cool. You would never see a car dealership, you know, teach you how to do things yourself because that's 50% of their profit. But at Tesla, they're actually holding workshops now at the service center. When you buy a new car, they say, come to the workshop. We'll teach you how to do the common stuff yourself. We'll teach you how to change your air filters, you know, basic maintenance that you have to do. There's not much, you know, change your tires, whatever. We'll teach you how to do it all yourself, and you don't even have to come into the service center. And that actually alleviates concern. And I think they'll probably have to, you know, probably lean a lot more on third parties. You know, they provide pretty great service manuals, right to repair type stuff. So I think they'll probably have to obviously build out a lot of service centers as their auto business and robotaxi business continue to expand. But I think to really maximize the potential of this technology, they're probably going to have to lean a lot more heavily on third-party repair shops as well.
Okay, Cody, I believe is this your first time speaking?
Yep.
So on your profile, it says Principal Managing Director at Slack Capital. What's Slack Capital?
Oh, I do commercial real estate finance. It's my day job.
Okay. Do you see commercial real estate becoming a systemic problem for the economy?
Systemic problem. I mean, we could do a spaces all by itself on that topic, but no, I don't. I think, well, I think a lot of the advances in AI are going to help fix a lot of this stuff as we go. But we are seeing some cracks in office and even some multifamily in certain markets. It's becoming challenging to get things financed, et cetera, like every other part of the economy. So we're not unique in that. We've been probably in a recession for 6, 8 to 12 months already in our side of the economy. So yeah.
Which geographies are the most problematic? Is it Northeast?
It depends on the asset class. So office is all the major centers. New York is having a lot of trouble. Chicago, Los Angeles, San Francisco. In multifamily, a lot of it is in the lower states that were very hot. So Tennessee, North Carolina, South Carolina, Florida, parts of Texas like Houston is having trouble with some softening of rents and challenging market conditions there. But not a lot of hurt yet, but there probably will be some that comes very soon here.
I agree. ACDC.
Cody, you said that there's a lot of problems that the AI will fix. Can you explain that a little bit more as to how AI will be able to help through this time?
So I'm thinking a lot more macro than how the commercial real estate market might be solved by AI. But I think that, if what Elon says is that, with correct AI, there's no real limit to GDP. I think there is something to be said of that. I've heard that from 4 or 5 pretty big AI speakers and thought leaders. And now on what time frame and just how that touches every part of the economy is obviously remain to be seen. But I think that some of the systemic problems that we're seeing in our space with office, work from home, demand changes on the way people use space will ultimately end up hurting some of those sectors, but the larger economy is probably going to be a lot better off in the long run due to AI. That was kind of what I was thinking.
I thought maybe you meant even Optimus needs an apartment to live in. So
Who knows? I
Maybe.
mean, I can't discover what we're going to use. If I had that thing, like anything else from this space, I'd have a huge amount of money.
I think it was Smokaway who tagged me on a reply that he got from Elon recently. Elon had previously said a 1-to-1 ratio of Optimus to human, but sounds like he kind of upped it a little bit. Omar, did you see that reply?
Yeah. I think he said at least 2, maybe 4.
Mm-hmm. Yeah. Yeah, I pinned it at the top. Elon says, I think the ratio will be at least 2 for every human, maybe 3 or 4, as there will be many in industry producing goods and services, often for other robots in the supply chain. And this was May 1. So recent data point. There you go. Enzyme.
Hey, and we're finally getting off of Supercharger, so I even hate to bring up the word again. I don't think I want to hear it again for a week. But one thing that crossed my mind that I really feel like Elon should get props for is just his leadership in the reorg with using this Supercharger department as an example. You know, you've got 120, 140,000 people. You're trying to rush through and get everybody to really take your vision seriously. And you've got one department pushing back saying, yeah, no, we can't spare anybody. And that's sending a signal to the other 100,000 plus people, you know, and that could, just from a leadership perspective, that quickly devolves, you know, and to be able to, you know, take a 500 person example and make a leadership decision and say, you know what, check this out, delete. That gets everybody's attention. All of a sudden, everybody knows they're serious. They're all looking at each other and going, oh, well, I wasn't going to say anything, but you know, if it's me or you, buddy, uh, we really got to be honest here and transparent. And so, to me, I think that that's probably the biggest win from being able to make the change move quickly at Tesla, even if he had to hire back all 500 people. So, not to say that there's not some benefit in talking about, well, you know, what if this means something deeper in terms of superchargers? I kind of doubt that myself. I think that,
Okay.
yeah. So, anyway.
Yeah, I got you. Anything?
Yeah, just real briefly, talking about robotaxi fleet maintenance. I think Cody brought it up, or he might have been talking more about repair, but just on the maintenance front, it seems to me like that wouldn't be a core competency of Tesla. Not a lot of, I don't know, smarts involved in charging, cleaning out interiors, that kind of thing. I would imagine that even the storage of the vehicles would probably be a third party type of a thing for their own fleet, and probably a great third party opportunity for a bunch of people that want to opt their consumer vehicles in, but don't necessarily want to clean out their vehicles every day. Maybe they end up, you know, with entrepreneurs that want a little bit of a cut, working out some kind of a deal. I could see a whole side industry popping up from that.
All right.
Yep.
Thank you. Omar, Troy posted his forecast for Q2. Pinned it at the top. Would like your thoughts on it. Troy says Tesla deliveries are not going well this year. Q1 saw 8.5% decline deliveries compared to last year's Q1. Q2 is expected to be worse, both in terms of percentage and unit decline. Q3 unlikely. It could go either way. Q4 is very likely to have negative growth. What do you think about Troy's forecast? Because this is in direct contrast to what Elon said, that Q2 should be much better than Q1.
Well, I'm inclined to believe Troy. He tends to have his finger on these things pretty well. I don't follow it that well, so I mean, it always kind of sounded like a tall order to me to match the 460K comp from last year. So I mean, you look at their Q1 numbers; they're nowhere close to that. So, I would hope they could get over 400,000 maybe, but sounds like it's going to be another tough quarter.
Yeah. Yeah, I think when people are looking at these massive layoffs and restructurings and hardcore and he's getting intense about it. This is wrong. This is part of the reason, obviously.
I just don't know how you square it with the comments on the Q2 call. And they're saying Q2 will be a lot better. The CFO agreed. I think Lars might have agreed. I don't remember. And they were saying, that we had all these one-time things happening. It was one thing after another, and we expect a lot of those things not to recur. And the CFO was actually saying, "Oh, we're actually going to draw down inventory in Q2." So how do you square? And then there's also the fact that there's seasonality effect, and after the tax refunds come in April, a lot of people go out and buy cars. So I'm just difficult to square what Troy is saying with what we heard on the conference call like a week ago.
Well,
Yeah, I mean, maybe I can. Oh my God.
I mean, I think after they're making a forward-looking statement, obviously, based on what their expectations are. That may or may not pan out, depending on how market conditions are. So their statements are one data point, but then ultimately you want to see that backed up with real sales data. And I think he also wanted to strike a pretty bullish tone. Obviously, we're all voting on his compensation package now. If Q2 numbers are bad, the vote will be over by then. So I think you'd expect him to be kind of bullish. So I take that into account, but ultimately, Troy has a track record. He publishes how far off he is every quarter. And, it's a few percentage points at most.
Yeah,
That's at that,
Michael,
and
when I
that's
was an when
sorry.
I was an
Go
investment
ahead.
banker, when I was an investment banker, when we got, I did a bunch of different DCF modeling and forecasting and for M&A purposes or, estate planning, a bunch of other stuff. And I worked with dozens of managements, dozens. And literally the first thing we did when we got the management forecast to be as an indication for our DCF modeling, when they sent the email, the first thing, have everything they said, like literally, just like have all the forecasts. Managements are always optimistic. They're always optimistic, and so like when they say something like much better, that's very vague, right? What do you mean much better? Production, deliveries, cash flow. Like it could be cash flow, for example, right? There was a big gap between production and deliveries in Q1. Maybe that's not there in Q2, like you mentioned. Maybe they talked about the inventory drawdown. So from a cash flow perspective, it could be better, but that could be because of a production slowdown and the deliveries exceed, or it could be FSD subscriptions rising. You know what I mean? It could be so many different things, and it would still be true. What they said would still be true in a sense, but for our purposes, in terms of specifically deliveries, it may not apply to that. So I think it's important to kind of consider all these possibilities and just kind of in the back of your mind, keep in mind that managements are always positive about things.
That's fair. I'll just say about Troy though, he's accurate, very accurate at the end of the quarter. He posts his comparison, the end of the quarter result with what the actual was, and it's the beginning of the quarter, and it's not necessarily as true.
Well, it's not necessarily the beginning of the quarter, right? We're almost midway there.
That's fair. Yeah, 1 month in.
And then the other thing is, like, I don't know if there's that much of an accuracy difference between what he publishes towards the beginning of the quarter versus I mean, I've seen people say that a lot, but if you look at the kind of the data, it's still more accurate than any other analyst I know, even if it's just at the beginning of the quarter. So unless if you're predicting some sort of specific change that he's missing, like, for example, are you predicting a surge in Cybertruck production? Are you predicting, now that we have maybe potentially Model 3 long range qualifies? I mean, we're not going to know that probably for a little bit. Maybe demand for the Model 3 long range will jump. Who knows? Or do you think Model 3 performance will be like this amazing, demand vehicle? But if you believe that high interest rates are the primary reason why, maybe Tesla sales growth slowed down a little bit in the recent quarters, or if you believe that hybrid sales are eating into Tesla's, EV market share, both of those are still true, right?
Yeah, they're both still true. But I am on record, since you were talking about what are you specifically thinking about. I am on record saying that I think he's way off on production so far this quarter, and for the rest of the quarter.
Okay, so let me ask you this: is there any factory that you believe that he's kind of underestimating, or any model?
I'd have to go back and look, but definitely Fremont Highland production is a big underestimate, I think. Probably the biggest, off the top of my head.
Okay.
Yeah.
Well, what we can do is, so what number does he have? And if we can do this. How about this? Okay, since he doesn't come to this space, I wish he did. I invited him a couple of times, but I think he just wants to kind of do its own thing. I can take his side, okay, for a coffee bet. So if you want to pick a number in his charts, okay, any number, production or deliveries, any model, any factory, any country, pick whatever number you want. But what I ask for in return, since I'm kind of relying on his work, is a 10% variance. Okay, so I take 10% below, 10% higher. So let's say, Model 3, you said the new Model 3 out of 3 months. I don't know what his number is, but just assume for a second that it's like, I don't know, 15,000, whatever. So I get 13,500 to 16,500. And then whether you want to bet below that or higher than range, then I'll make a coffee bet with you. Is that fair?
Okay, were those numbers you were throwing out specific numbers, or you were just
No,
example?
Off the top of my head, yeah. Just kind of, for example,
yeah,
illustration.
I could take a look and see, but I already have a coffee bet going with Machine on the production. But I can make another coffee bet. Model 3 Highland would be a great one to make a coffee bet on. And I know this bores some people.
Yeah, whatever you want. But here's the thing. But the thing is, like, the number has to be the latest estimate, including the private Patreon. Okay. So private page. So you can't be like, yeah, me too. So there you go. So we can both check that latest number. Whatever he has published the last is going to be the basis. And I take 10% below, 10% higher of any number, any country, any model for that quarter. At any point in the quarter too. Okay. And then we'll do a coffee bet that way. This is just between you and me. So this deal only applies to Michael.
I get a special discount.
You get a bulk coffee discount, yeah.
So, but we obviously can't say the number because,
Yeah, exactly. Just kind of like, do the back of the envelope on your end, and then just offer a specific bet, and we'll do it that way.
But can I do it with a specific number? Because then I'm kind of giving away his.
Yeah, exactly.
you-
Specific number. Yeah.
Okay.
Yeah. So this is like our long term. What's that stock sale, automated stock sale plan called that the executives do?
10B5,
Yeah. This is
10B5-1 or
yeah.
something.
We can't call this 10B6. This is our long term 10B6 plan, and you can draw. You can draw against this plan for customers.
This is fun. But I'll just say, I know this topic bores a lot of people, but at the end of the day, like the cars that they deliver is kind of rate limiting for the cash flow, which they really need now for AI projects. They're gonna basic balls to the wall. So it is important to consider um, the automotive business.
Yeah. All right. Any other questions, comments? Cody, is there anything else you're seeing on the macro front since you're following this topic? I'm always looking for more people who kind of deeply understand macroeconomics.
Yeah, not really. I mean, I can't think of anything in the moment, but I'll raise my hand if there's something.
That's fine. I can maybe kind of point to a topic. So, what did you think of today's jobs report? Also, a couple of days ago, we got a consumer sentiment report that was worst since 2 years. So those two combined, maybe ACDC might be right. Maybe consumers are kind of tightening a little bit.
Yeah, I mean, we pay really close attention to what the Fed's likely to do at their upcoming meetings, and what the metrics that they're watching. We look at treasuries very closely all day, every day. We're seeing treasuries soften in light of the latest couple of news bullets you just mentioned. So, I do think that there is some backing that they finally believe maybe the economy has cooled off a little bit. Whether that translates into all of our prices at McDonald's and on our homes and what have you, making the consumer sentiment change over time once it does cool off, who knows? Obviously, they're constantly looking at what's going to happen or what they can do to either try to avoid influencing or influence our upcoming election. And lots of people have different opinions about that. But it's something that we're watching very carefully, because what happens in the commercial real estate market feeds into what happens in the broader economy, and very much vice versa as well.
I agree completely. Okay, good. Omar, did you hear about this, about the voting? If people publish their control numbers when they post the pictures, like I voted, and it says their control numbers, that others can go in with that control number, change their vote. Did you hear that before?
I'm not sure if that's true or not, but probably best to just hide it.
Yeah. Why take the chance, right? It's kind of like sharing your VIN number. Like, can someone really do something with your VIN number?
I mean, your
Yeah.
VIN number is written on your windshield, so that's not a secret. But
Ex-
I mean, I don't
Exactly.
know what the control number is, to be honest, but probably just best not to publish any personally identifying information.
Okay. All right. That was a public service announcement. Don't publish your control numbers when you post your I voted, this and that.
So I joined late. Did anyone talk about how the rollout is going of 12.3.6 on the legacy? Because I've got some feedback on that.
Yeah. Just share your feedback.
So, well, since I updated from 11 to 12, some of the things, well, obviously smoothness is good. The very human-like. A couple of the main complaints I've had in version 12 have been lane selection, have been just some funkiness. On a previous spaces, we were or y'all were talking about the different settings of it might have been the one with Adrian and Dan O'Dowd. I'm not sure, but what I've noticed on at least my legacy car, it's a Model S 2016, right at that cusp with hardware 3 and MCU 2, is the lane selection has been very problematic in 12. The different settings, my preferred setting is actually the moderate setting. What I found on aggressive is that it tries to shoot the gap a lot tighter than I think anybody would be comfortable with in a lot of scenarios. You know, making a right on red, for example, in a non-protected right. I think technically the car would fit in those spaces, but it does it very, very tightly. And so I typically keep it on that moderate setting. And the difference I find between moderate and chill is chill, at least on highways, will never go around slower traffic. It just doesn't at all in my car. But in moderate, it does. And so that seems to be kind of the down the middle version that works well for 12. With regards to 12.3.6, it does seem like some of the issues have been fixed in terms of lane selection, at least in the first, I think, 5 drives I've made. The one regression I noted is that where 12.3.4 was handling speed bumps really, really well, very naturally, very human-like, and also dips in the road. I noticed on a couple of drives this morning, it was essentially ignoring speed bumps. So I didn't know if anybody else had seen that.
I heard the speed bump comment before. So this is multiple people have said that now that FSD is avoiding speed bumps. Sorry, man, I'm getting tired. It's Friday. Omar, any comments on what Cody said?
No, I mean, I believe him, but there's a lot of things that could improve on, sure.
Yeah, it's hard to kind of gauge from a personal anecdote at this point because the system has gotten so good that it's really what matters is fleet-wide data as opposed to personal. Because, for example, Tesla is always adjusting false positives and false negatives. So what that means on an individual level is that your own experience can improve or worsen slightly every now and then. But what they're targeting is fleet-wide improvements. So, I think over time, it's continuing to improve at a rapid pace.
It may be
So what I recommend people do is go to TeslaFSDtracker.com, TeslaFSDtracker.com, and really kind of like maybe take the weekend to explore that website because there's so much data over there. Just go beyond the homepage. Elias has dug into and sliced and diced that data in dozens of ways, and they're all very informative. So I think that will improve if people do that. Take the weekend to kind of like spend an hour or two on that website, understand the data presented. It will improve the discussion quality here too. TeslaFSDtracker.com. Corey, are you there?
Yeah. Yes. I was going to say one of the big improvements, I think 6 versus 4 is low speed merges. I had posted a while back that there would need to be some retraining. It may very well be on a couple of drives that I've seen, but it looked like it was a constant problem in my car on 4. But in 6, there's really, really smooth, very human-like merges where drivers around me are, predicting what I'm going to do. I know what the car is going to do. Not a lot of jerkiness on the wheel. All that it seemed to be improved. So that's great.
Good. And I'm going to test 12.3.6 tonight, actually. So maybe I might do a space later on, just for the maybe like a half hour, 45-minute kind of ride, and give my live thoughts as I do the test. So we might do another space, half hour, 45 minutes tonight on 12.3.6. And Leonard, thank you very much for tipping via X. Leonard says, I think he sent this maybe after I said I'm tired. He said, have some wine. I appreciate that. I will definitely have a glass of wine on that. All right. So maybe it's a good point. This space has been going on for 2.5 hours. If you like to support the space, the Patreon link is at the top of your screens. I highly encourage the value tier. I'm going to build a Tesla DCF model and publish it for the value tier patrons, and adjust the assumptions with discussions in this space going forward. Tesla tier and the spaces tier support this space. Tesla tier also gets analysis of SEC filings. Like, for example, I just published a 10Q analysis in there. Sometimes I publish Tesla-related articles in there as well. Like, for example, about a month or two ago, I talked about resale values of Teslas. And every couple of days, I publish a list of posts that I find new and material information, as opposed to kind of going through the thousands of posts that I sent out every day on Tesla Twitter. I think it's good value, and it supports this space. All right, let's leave it on that note. Thank you very much, everybody. And I will talk to you all probably tonight for the FSD drive. If not, next time. Take care. Enjoy your weekends.